Hi, I'm Victor. I'm an active value investor, and I like sharing my investing journey online on YouTube to help other investors learn about certain companies that I invest in and see if that's something interesting to them. Today's company is Strategic Education Incorporated, symbol STRA. This company provides higher education as a private company, and they provide college degree education, some occupational education like nursing and other fields. It's a good growing company, a steady grower. They had their earnings call today, and I wanted to share with you my updated analysis on STRA. I scorecard all my investments, and I have 4 criteria with one decision whether to buy more shares, hold, or sell my position in a company. Do I want to be in the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. Based on the answers to those questions, I either buy more shares, hold, or sell this stock. Strategic education really provides the type of education that people are looking for and is not available in the traditional institutions. So it's good to see a company like this operate in a space that helps people really empower themselves through education and study fields that they're interested in. Taking a look at the earnings that they just released, or the financial statements that they just released, revenue did go down 6% year to year. So that's unfortunate. I think 2022 could have been a flat to a growth year. So that was a bit disappointing. They were profitable. That's very good to see. Taking a look at their balance sheet, it's good that they have a good cash position. They entered the year with a good cash position, and they ended with a good cash position. A couple of things that I wanted to point out. They continue to lower their long-term debt, which is very good. They went from 141 million to 101 million. Very good there. And they are rebuying shares. So the number of outstanding shares has gone down. So that's also good to see. Looking at the statement of cash flows, it was a little disappointing to see that their cash from operations did go down from 180 to 126. Their investment in CapEx wasn't too bad. It just went down by $6 million. But this decrease really was a pretty good drop compared to 2021. I value companies based on the cash flows I expect the company is going to produce in the future, and then discount those free cash flows to today's dollars. Strategic Education provided their free cash flow for the last year, closed year 2022. That's going to be my starting point for my model. Based on that free cash flow, I'm going to grow that free cash flow by 6% in years 2, 3, 4. And then long-term growth of 2%. Those are nice conservative numbers. A discount rate of 8.8% will be the discount on all future cash flows. And based on that, I calculate that the company is worth $1.26 billion, but the market cap is $2.2 billion. So there's actually a current premium on the stock of 45%. The stock has run up a lot, 84% in the last 12 months, which really does explain why I'm calculating a premium on this stock. The balance sheet's in great shape. It's less than 3 times EBITDA at 0.81, so very good balance sheet. Performance-wise, it was not good to see that revenue was dropping 6% in 2022. Their free cash flow was okay at 83 million. I did expect that that was going to be higher at around 120 million for the year. So they were lower in that respect as well. They pay a decent dividend of 2.6%, and they have a good balance sheet. Now, looking at 2023, education continues to rebound. People really want to get educated and really empower themselves. The stock price is really high. It's run up 85% in the last 12 months. And you saw my calculation where I think that the stock is valued. I think that there will be a post-COVID increase in admissions now that people are not so concerned with being in rooms with other people. It is a steadily growing company in a fertile industry. And this company does provide, diversification. It's the only education stock that I own. So let me scorecard Strategic Education. First, it is an industry I'm interested in being in. The company, I believe, is operated well. Debt is less than 3 times EBITDA, but there's a big premium on the stock currently. So I don't want to buy shares for sure. In fact, I'm going to sell my stock. I'm up on this position, close to 60%. It's a good time to cash out and then continue to study the company, and come back into the company either when their financials get better or the stock price comes down. Hey, thanks for watching the video. Hope you found it interesting. Please keep in mind, I'm just sharing my investing journey with you. I'm not recommending you buy or sell any particular stock. I'm not a financial advisor. I'm just an individual investor sharing his experience in strategic education. Good luck investing in 2023.